Hello traders, this is Rich Derrick from tradesight. This is the market preview for Tuesday, January 15th, 2013. This past session we had, pretty much the price action dominated by very modest distribution. Could have been considerably worse, considering some of the headlines that came out today. But the overall lay of the land after settlement was for kind of a modest distribution day. We had ES futures lower by about 3 handles on the day. The NQs were lower by 15, so the NQs were relatively weak versus the broad market. The Dow futures were higher on the day as well as the cash, and the commodities all in all were fairly weak. We had a little bit of weakness in the oil futures. Gold and silver a little bit stronger, but that was probably more of a defensive rotation rather than anything else. One of the reasons we could say that is because if you look at the copper prices weren't really that weak on the day. The currencies are kind of holding their previous range more or less, with a couple of key technical developments that we'll go over a little bit later. The advanced declines were very, very muted. The advances on New York were basically flat, and it was a small loss here for the Nasdaq side. So let's get on to the good stuff. Let's take a look at some of the charts here. Here's a look at the broad market futures. The broad market futures really didn't do too much on the day. The previous high was never really in jeopardy of being taken out and run up here. We did trade below Friday's close by Friday's settlement by a few handles, but nothing really too dramatic. The real takeaway though is that we've got this small little doji candle. We're essentially still inside the real body of the breakaway candle out of that previous range. The settlement was below the open, which is always negative and never positive. So we've got to see what the market can do to build on this. Obviously, we're kind of up in the area of the prior highs here. This prior high, 1465 area, is still the area that the market is trying to work off right now. So we can potentially pivot higher and break out and maybe take a run at some of these higher levels. 1500 being the big one here. If the breakout can take hold, which would be right around that 1500 area. Now here's a look at the NQ futures, which were relatively weak on the day versus the S&P side. Apple being as weak as it was definitely weighed on these. The chart is obviously in comparison to the S&P side much weaker on a relative basis. We are not anywhere near challenging the highs as we are in the S&P side, and so that's always a concern for the market when you have the S&P side making new highs and the Nasdaq cannot cooperate nor confirm that strength. Near-term levels are pretty much the same since we're still in the area of our breakaway gap, while the broad market side has made good on that last little push and held it. The NQ side has been relatively weak, and we're still actually trapped within the real body of the initial breakaway candle after the congressional vote on the cliff package. So we're still above all three major moving averages. We're above the 50, the 200, and the 10, but price remains trapped and boxed up here, waiting for some kind of a resolution of this recent range. Here's a look at our multi-sector chart. The XAU had a little bit of a limp today, not really doing too much. The green line here, which is representative of the BKX, is really starting to struggle here at this little area, consolidating. We'll look at the individual chart in a bit, but this is definitely something that's really holding back the S&P from really breaking out. We're starting to see some rotation into some of the lagging sectors like the transports and the energies, and that's something that we're going to have to monitor very closely, because those are the later stage cycles. So if they can break out and maintain some good positive upside, we can still get higher prices in the broad market, the S&P, even without the financials really being too powerful. Not something that you technically really want to argue with. It just kind of happens, and it's kind of the way the markets tend to work. There's certain sectors that tend to perform better in the early recovery, and there's some that tend to perform better in the later part of the recovery. So really it just depends where you are in the cycle. And what we're seeing right now is indications that we're really in the later part of the cycle. It doesn't mean the cycle's over, but it does mean that that we really need to start looking at these new sectors that are exerting leadership in the market. Now taking a look at the put-call ratio, nothing really new here in the put-call ratio. This still remains fairly benign. We're still well within the typical trading range, so nothing really sticking out, giving us any kind of a warning that we're at any kind of a key inflection point just yet. Here's a look at our 10-day trend, which is pretty much right in the middle of the neutral area. We pulled down a little bit. We're getting a little bit closer towards that oversold area, but never really got even close to it. Right now, we're really essentially just kind of in the middle of the band here, kind of in that comfort area where the market has energy if it wants to move in either direction here. Now, on an intermarket basis, the SPX versus the TLT is still showing some pretty good strength in the S&P side versus the TLT. So that would be strength in favor of the growth-oriented stocks versus the defensively natured TLT, which represents the government securities. So we're still seeing that this breakout of this recent range is still holding, but we still have a little bit more work to do to really make this good and to get it through the next level, which would break us out in the next time frame up. Here's a look at the same chart. This is the SPX TLT cross. What we've done here is we've just jumped up to the next bigger time frame. We went from the daily time frame up to the weekly. Here's the weekly time frame. You can see that we kind of shook off this little bit of a downward bias. We've driven back up towards this prior high that we saw in August. What we really need to do is to break out above these highs that we saw earlier in 2012. If we can break out above that, then we're going to probably see a rotation from fixed income into equities on a bigger scale, a broader basis. There's been a lot of chatter about the positive flows into equities recently. That's been going on for a couple of months now, and while that's all well and good, it doesn't really mean anything until you can start taking out some meaningful levels that will really indicate that we have some real momentum. And once you have some real momentum, that's when the man on the street really says, hey, I'm missing out, I've got to get involved. I'm obviously not with what's really going on in the market. I'm not saying that's necessarily the right thing to do, but what I'm saying is that is what we're trying to say is that's what will ultimately load some momentum into the market and really allow it to move. So this breakout above this key area here, which is right around 1260 in the ratio, if we get above 1260, we've got the potential to see some real momentum into equities and out of bonds. All right, so let's take a look at the sectors in order of performance. This is really interesting. This is the hardware sector. That's the computer hardware, HWI, and obviously had a really big day today. Had a seeker exhaustion in place here. You see the 13 on the chart. Really kind of basing really nicely underneath the 6/8 level. Couldn't get above the 200, and it looked like this was really poised to make a move one way or another after winding up like this. However, the news on Dell today really popped this thing higher. This index is really dominated by Dell, HPQ, and to a lesser extent some of the other manufacturers. But this went up, penetrated, and closed slightly above the risk level here, not quite nullifying this exhaustion warning. But what we've got to do is we've got to see if we can trade one tick higher than the high of this candle, and if we do so, then this 13 will be nullified. If that happens, then we could see a real sprint to the upside here and a challenge of the prior high. So definitely keep the HWI and any index components on your radar screen this week. Here's a look at the BTK. The BTK has been, really was the best performer of 2012 as far as the NASDAQ stocks go. We do have a 13 seeker exhaustion in place. We've reached up to interact with the risk level, which is right in this area here. It's not broken yet. And also note that we're in the area of exhaustion here within the Murray math levels. We're right up around plus 1/8 here. Other thing to notice is we've got a 9 up here in the seeker count, and then we've got a 1 through 13 in the countdown, and now we've got another 1 through 9 completed. This will print 9 tomorrow on a new seeker setup phase. So this is not quite a 9-13-9 because we don't have the 1 through 9 here beyond the 1 through 13 here. But this is another reinforcement of that area. I would expect that this is going to have trouble tomorrow, even though this looks higher and all this looks positive. Here's a look at the SOX index, which is of course very important to the NASDAQ sectors. We're 12 bars up in the seeker countdown. We're one candle away from that exhaustion 13. Definitely keep an eye on this. If we do record 13 here, it's also going to be in this triple top area. Here's 1, here's 2, and it'll be right up around 3. And this is also the 8/8 area on the Murray Math box. So this is going to be a very formidable signal if it does complete without recycling first. Here's the XAU, still basically abandoned and kind of left as a source of funds. The EMAs, the moving averages, though, are starting to level off. The 10 is going flat. Obviously, the 200 is relatively flat. The 50 is still downward sloping, which is definitely a problem. If the 50 closes back below the 200, this will be another momentum move to the downside then, and probably put this previous low in play. But for right now, we're still just kind of hovering sideways here. The levels are kind of in the lower area, but not at a key support level. We're below the key 4/8 level, and obviously well above this 0/8 level. So we're just kind of hovering here in the midst, if you will. Here's a look at the BKX, which is still in that kind of consolidation range. We're still working right around this 8/8 level on the Murray Math box. Not able to really pivot higher. We did have this breakout above this prior high. A lot of longs were probably getting real excited about this for a full leg up here. The problem was we were really running into the teeth of this 8/8 level, so that really kind of holds things back. And we weren't really expecting this to run away. We've actually had plays in the last week or so on both sides of this, on the long side and the short side. We had a little short scalp today that worked fairly well. And we're definitely willing to play both sides of this until we can resolve this range and break away from this 8/8 level here at about 53 1/4. The OSX was the last lagger today. This is one of those late cycle plays that we talked about earlier that really should be kicking in, but it really doesn't have any teeth yet. Really need to see this start to get some sponsorship and some support. Need to see some money rotating into this. The oil chart still looks pretty constructive. We'll talk about that a little bit later. So this might be a little bit of a delay. Not what you really want to see. You really want to see this leading oil rather than the other way around. Right now, oil is actually leading this to a degree. So this really needs to get up and above this 8/8 level, about 237.50. Then we got to challenge the old high here. The old high, very interestingly, is right around this plus 2/8 level. So if we close above that, we'll frame shift this whole box to the upside. Good news is we're above the 50 and the 200, and also the short-term 10 EMA. So very, very poor distribution day today. We're down a full 1%, making an outside day to the downside. So we really don't want to see that if you're on the bull camp. Really need to find support here and hold above this 10 EMA. If we lose the 10 EMA and break down below last week's low, definitely consider this as one of your top short sectors for the rest of the week. All right, so here's a look at the oil futures. We're above the 50. We're above the 200. The 200 is still downsloping, but look how this 10 EMA has been defining the short-term trend. We at tradesight we talk about the 10 EMA defining the short-term trend. That is, if we're above the 10 EMA, the short-term trend is positive. If we're below the 10 EMA, the short-term trend is negative. If the 10 EMA is flat, horizontal, and we're just kind of pivoting back and forth, then the short-term trend is neutral and waiting for some kind of a decisive push from either the bulls or the bears. But right now, we're just kind of in this little grind to the upside here. We're right in the area of the 4/8 level, which is kind of in the middle of the harmonics. So we're neither overbought nor oversold right now, but we do have construction to the upside as we're holding above the 10 EMA and these other key areas. Couple things to keep in mind here. This 100 level is a round number, obviously. It is also the area of the prior high on the chart and also the origin of the active static trend line. That's this green line here from this 1 through 9 seeker setup phase to the downsides that's active right now. So right in the middle of the box, We're at 93.75. If we break higher, that puts 100 in play. We'll have to see what this does for us. This really could be really key, especially for the second half of the year. I really doubt that the second half of the year is going to look very good for equity bulls if the oil prices in the OSX really can't get going. So definitely keep an eye on this sector going forward. As always, please feel free to leave a comment below. We do this for you guys, and we always looking for ways to improve it. If you have any questions or concerns and you want to learn a little bit more about our techniques and some of the language that we use, please feel free to take a trial and drop into the tradesight trading lab, where you can talk to the analysts in real time and ask questions, and we're more than happy to share our thoughts with you. So as always, thanks for listening. This is Rich Derrick from tradesight.